Well, good morning. No, not really. You need to look at the bigger picture. First of all, there was a phasing effect, because customers anticipated into Q1 quite a bit of sales ahead of price increases. The second effect was what we flagged to the market, which is destocking on Grand Marnier in the U.S. In the U.S., in the second quarter, our net sales were up 3%, but the real underlying depletions were up 16%. So the business is very, very healthy. And last but not least, yes, there was a little bit of a tail-end effect of bad weather in the month of May in Central Europe. Net in net, though, all of our regions are growing double-digit, and we're continuing to take substantial market share.
How do you feel about the margin picture as well? Pretty strong figure. Profit margins rose 24% in the first quarter as well. Again, tighter margins or managing to hold the line on price?
We successfully passed all the price increases. Margins for this year, we basically flagged flat margins, but we're very confident about improving our marginality next year as lower input costs kick in.
I can't believe it was 7 years ago now, the Grand Marnier deal as well. I noticed that you're going to the majority shareholder. I think the Garavaglia family has a 54% shareholding. You're tweaking their holding. Is that in order to make it easier to make more acquisitions?
Yes, we've instituted a new multiple voting, enhanced voting mechanism, and our loyal long-term shareholders will accrue over time multiple votes. As of August, that goes from 2 to 5 times, which means that on paper we could raise close to 20 billion euros, whilst enabling the Garavaglia family to maintain control over the company. So that clearly changes the scenario of what we can do from a M&A perspective.
Well, obviously we're looking to the US market and we'll see what they're drinking. Are we talking more tequila here, Robert?
The US for us is on fire because we're skewed versus the three very strong categories: tequila, number 1, bourbon, number 2, and our aperitifs. Aperol is growing by 60% in the US, so it's really becoming a very important factor.
What about valuations at the moment? I mean, we're talking to our next guest about the volatile equity markets as well, equity and indeed the private markets as well. Just specifically, what can you tell us about the kind of acquisition, the kind of size you're looking for?
We could, do bolt-ons, medium size, very large size. So it all really depends on what is available and what really fits our needs. It's clear that with interest rates increasing, multiples will over time become more reasonable.
Let's go back to the concern over some of the sales figures, and you've pointed out that you have very poor weather across core southern and central Europe, and temporary delistings from selected European retailers due to commercial negotiations in connected with those price increases as well. Can you break that down in a little bit more detail for us, Robert?
Well, look, I mean, we've successfully passed all of our price increases. 2 retailers, one in Germany, one in France, decided to adopt a lose-lose mentality. We were out for 2 months, and their shoppers really insisted and requested that our brands get back to them because they voted with their feet going to their competitors. So at the end of the day, this really shows the strength of our brands and our brands' equities.